The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Tuesday, October 8th, 2024. Well, we've got an interesting dichotomy taking place where we have the bond markets affected by the crash in the Hong Kong stock markets, but we did not have the equity markets follow suit. We're going to take a look at that. We're going to take a look at the pillage in the gold and silver paper markets, as well as the oil markets, and pretty much why technical analysis no longer works in the Western financial system. So with this in mind, let's go ahead and jump right in and see how the markets fared. Well, as I mentioned, the equity markets pretty much had a really decent day. The Dow was up 126 points to regain the 42,000 handle at 42,080, while the S&P 500 was up 55 points to 5751, and the NASDAQ was up big, up 1.45%, 259 points, to regain the 18,000 handle at 18,182. Well, the biggest Hong Kong crash since 2008 on record volumes. What does that mean? Only after a furious 30% rally had already taken place, it was suggested that the move in China had peaked and it's all downhill from here, which incidentally none other than Goldman's trading desk had already predicted. So, about a week and a half ago, maybe 2 weeks ago, I mentioned that after the FOMC, or actually, it was either just before or after the FOMC, China had done a quote-unquote stimulus move to go ahead and boost some liquidity into their stock markets. But the reality was they just adjusted interest rates for mortgages, for interbank lending, and for consumers, hoping to stimulate the economy as a whole. However, this did not last long. Chinese stock markets did see a decline. Some in the West would call it a crash, but Hong Kong really had a crash, cratering the most since the Lehman bankruptcy. Now, why is that important? Well, a lot of money has remained in the global South, in Hong Kong, in Singapore, Beijing, etc., from the West, moving out of equities and the general economy in the West after 2008, thanks to the Fed making liquidity absolutely cheap, and you could get it out of a Cracker Jack box. But with that being said, now the real question is why would something that happens in China affect the equity markets in Europe and the United States? In reality, they shouldn't. Not unless you have most of your hedge funds having their wealth, say the BlackRocks of the world, into the Hong Kong and Chinese markets. Otherwise, well, the only thing you can rely upon is that U.S. companies do manufacture in China, but that has nothing to do with the equity markets. So you have to wonder where this is all coming from, and perhaps more than anything, that's why we're seeing margin calls raised for the pillaging of other paper markets to provide the margin for things like equities. In the bond markets, well, yields decided to drop yesterday after getting up to 4%, or I should say nearly 4.1% in the 10-year. We did have a slight purchasing of bonds by the primary dealers, aka the Fed, monetizing its own, because when we had the 3-year auction today, there was an absolute plunge in foreign demand. Buyers fled, and it was absolutely gruesome. If you go over to CNBC, they have a tendency to grade the bond auctions, and this one was an F to F plus. One would think that the first coupon auction after the Fed's rate cut would have passed better. One would be wrong. Moments ago, the Treasury sold $58 billion in 3-year paper, matching the all-time high issuance in an auction that was unexpectedly ugly. Don't know why unexpectedly, but everything on Wall Street is always rosy and through rose-colored glasses. The sales stopped at a high yield of 3.878%, the highest since July, and tailing the when issued 3.871 by 0.7 basis points, the first and biggest tail since June, and followed the biggest stop through since August of 2023. A little bit of gobbledygook, yeah, because I certainly don't understand the bond markets to the extent that very few, and that's why they get paid the big bucks on Wall Street as well as at the Fed. But the reality is, and this is just standard course, foreigners are not buying, the Fed is monetizing, and the government, which is creating all these treasuries to be sold out on the auction block, are not stopping spending. So things should get worse. We should start seeing more and more rates go higher as fewer and fewer buyers, and the Fed is going to have to monetize everything, creating more inflation and seeing things worse for fiscal and monetary policy. In the dollar markets, we finally had a little bit of a down day. The dollar in the DXY was down 5 cents to 102.48 against a basket of currencies in the Western financial system. But the big loser, of course, was, actually oil's a little bit bigger loser, but the second biggest loser was gold and silver. Just on Friday, we had closed, we didn't close over 33, but it was the high intraday high of the day, 33.01. Today, after 2 straight days of sell-offs, we actually hit a low of $30.07, almost getting back to the 29 handle. From there was some short covering. Closing out the day, silver was down $1.01 after being down about $1.70, and closing at 30.74, while gold was down much more, nearly losing the 2600 handle, but it ended up down $20.90 to 26.22. In the crypto markets, let me do a refresh here. Things go fast. Bitcoin in the last 24 hours had a move upwards of 0.30% to close out the last 24 hours of trading at 62,417, while Ethereum was up just barely short of 1% at 0.99%, closing out at 2446. The big question that is on, everybody in the crypto world's mind is this new HBO documentary that allegedly says they have found out who Satoshi Nakamoto is. Does anybody of substantial note believe this? No, but it makes for good theater. As HBO's documentary sparks fresh debate, a new report from 10x Research revisits theories about Bitcoin's enigmatic creator Satoshi Nakamoto, involving Nick Szabo and the NSA. The debate over the identity of Bitcoin creator Satoshi Nakamoto is back on the spotlight after the release of the documentary. As part of the renewed interest, 10x Research has published a report revisiting 2 of the leading theories, one that it is cryptographer Nick Szabo, and the other suggesting it was the U.S. National Security Agency, or NSA. Both theories are part of the larger debate that has attracted renewed interest in the documentary. So we already know that the NSA was involved with MIT with creating a white paper, 12 years before Satoshi Nakamoto dumped his white paper on the eve of the October 2008 collapse of the stock markets and the start of the Great Recession. So, is that a coincidence unto itself? It's not a coincidence. There was a purpose and a reason for doing that, and somebody somewhere knew what they were doing. The second question that has to be asked is, you have a wallet, a Bitcoin wallet of over 1 million Bitcoin, ultimately 1/18th of the entire float, and potentially at the end of the distribution, 1/21st of the float, and you have never accessed or spent or used a single Bitcoin in that wallet. So whoever did it obviously didn't do it for monetary sake. Perhaps it was done for some other nefarious purpose. that I'm just going to leave aside, because you know what? I have my thoughts and speculations on the thing, but they're really meaningless because I'm only running with about a tenth of the information necessary to make a really cogent thought and opinion on this. But the important point is question everything. When something mysteriously comes out at the end of a crisis, especially when the government has already published a white paper on it 12 years before, and now we have governments talking about and central banks talking about central bank digital currencies, you really have to ask the question, is it a completely divested way for the masses to strike back against the money changers, or is this just the next evolutionary step in trying to control all money and all commerce? Taking a look at the oil markets. Well, the profits can be taken away in the paper markets in less than a minute. WTI crude ended up down $3.57, 4.63%, which is a higher percentage than yesterday, closing out the trading day at 73.57, while Brent crude was down a little bit less than yesterday, which had nearly gone up 5%. It was down $3.43, closing out at 77.50. One thing on the side I want to talk about before we close out this market wrap-up is the new budget and power grab coming from Van der Leers and the EU. Poland's Piotr Serafin will probably take over as EU Commissioner for Budget on December 1st, but the President of the European Commission is already organizing his most important task, the draft EU budget of 2028 to 2034. The document, seen by Polish media outlet, don't even want to try to pronounce that, shows that German Ursula von der Leyen wants to dismantle regional policy across the EU, which of course will have a profound effect on Poland. And this is one of the more interesting things because we're starting to see Slovakia, Poland, Hungary. We're starting to see a lot of these countries that have been fed the lie of what it means to join the EU, fed the lie that they will be an equal partner. Not a chance. They will just be a vassal state the same way the U.S. makes Germany, NATO, the UN up to a point, Japan, etc., vassal states under it themselves. The money that is currently given to the regions and largely managed by them would be given instead to the governments of the member states. These governments would then divide it as they saw fit, allowing for more centralization and control, a move that would better suit Brussels to control everything across Europe. So, just like with the CBDCs in the Eurozone that the ECB president, gosh, I forget her name right off the top of my head. Just like the ECB, it looks like the EU Commission is trying to seize political, sovereign, and monetary control over governments, even outside of a CBDC currency, and instead want to control them by the budgets. And this is what we're seeing with Hungary. Hungary wants to fight back by ditching immigration rules and regulations to control their own sovereignty, and they're being withheld money that they gave to the EU in Brussels, and that's the way it starts. And until we're starting to see something else take place. China is putting a wedge between many of the EU countries. France, Germany, Italy especially, we know recently Italy, are all wanting to do more business with China, but the elites in Brussels are keeping them from doing it, tariffing them, and pretty much wreaking havoc on their economies as a whole. How long until these sovereign nations just say enough, pretty much hamstring the EU Commission, and start dealing with China the same way that the BRICS, ASEAN, the EU, the SCO are dealing with China on a one-to-one bilateral way, instead of having some bureaucrat administer whatever ideology they want and hatred of China, and instead try to become partners with them bilaterally, and we'll see what happens to their economies. Anyway, I want to thank everybody as always for stopping by on this Tuesday to get your market wrap up for October 8th, 2024. Also want to thank everyone for being a part of the Sirius Report community. And until the next time we get together, don't forget to subscribe, like, share, comment. Send this out to anybody you think would be important. And we will see you next time.